Everyone tells you the same thing. Just use a 3-to-1 risk-reward and you'll be profitable. It sounds simple, logical, almost guaranteed. Risk 1, make 3. Even if you lose more than you win, you should still come out on top. That's what they say. But here's the question no one asks. If it's that simple, why are so many traders still losing? Because the problem is not the ratio. It's how you use it. Most traders hear 3-to-1 and immediately think they've found the key. They start forcing trades, stretching targets, holding positions longer than they should, all in the name of hitting that perfect ratio. And in their mind, they're doing the right thing. They're following the rule. But the market doesn't reward rules blindly followed. It rewards understanding. Because a 3-to-1 setup on paper is not the same as a 3-to-1 setup in reality. You mark your entry, you set your stop loss, you place your take profit 3 times higher, and everything looks perfect until the trade starts moving. Price gets close to your entry, then pulls back. You hesitate. You wonder if you should adjust. You don't. Then it hits your stop. And just like that, your perfect 3-to-1 turns into a loss. Again, and again, and again. So you start thinking, maybe I just need more trades. Maybe I just need to stick to it longer. But deep down, something doesn't feel right. Because you're not losing because of the math. You're losing because of the execution. Because what they don't tell you about 3-to-1 is that it requires something most traders don't have: consistency in behavior. Not just placing the trade, but managing it, holding it, trusting it, letting it play out exactly as planned without interference. And that's where everything breaks. Because when price moves against you, even slightly, your mind reacts. You feel discomfort, doubt, fear. And suddenly, that clean 3-to-1 setup doesn't feel so clean anymore. You start watching every candle like it matters more than it does. You zoom in, you overanalyze, and then you do what most traders do. You interfere. You close early to protect yourself. You move your stop to avoid loss. You take small profits because at least it's something. And in doing that, you destroy the entire idea of 3-to-1. Because now your winners are small and your losses are still full. So the math no longer works. Not because 3-to-1 is wrong, but because you didn't follow it through. And that's the part nobody talks about. The ratio only works if you do. And that's where the illusion begins. Because on paper, 3-to-1 looks powerful. You tell yourself, I only need a few wins, and I'm good. You believe the numbers will carry you, that the math will protect you. But trading is not just math. It's behavior under pressure. And under pressure, most traders don't act the same way they planned. You say you'll let the trade hit full target until it starts moving in profit. Now you're up a little. Your heart rate changes. You start thinking, what if it reverses? What if I lose this profit? So you close early. Not because the setup told you to, but because your emotions did. And that one decision breaks the entire system. Because now your 3-to-1 becomes 0.5-to-1. And you don't notice it at first. You just feel safe. You feel like you protected something. But over time, that habit compounds. You keep cutting winners short and letting losers hit full stop. And slowly, your account reflects that behavior. Not the strategy, your behavior. And this is where most traders get confused. They think the system is failing. They blame the market. They start switching strategies, looking for something better, something more accurate. But the problem was never the setup. It was the inability to execute it as designed. Because a real 3-to-1 strategy is not easy to follow. It requires you to sit through pullbacks, to watch profits fluctuate, to accept that not every trade will feel good, even when it's correct. And that's uncomfortable. So instead of adapting to that discomfort, most traders avoid it. They adjust the system to fit their emotions. They move targets closer. They tighten stops randomly. They take profits early. And by doing that, they turn a structured system into something inconsistent, something unpredictable, something that no longer has an edge. And once that happens, nothing works. Not 3 to 1, not 2 to 1, not even 10 to 1, because the ratio was never the edge. The edge was in the discipline behind it. And without that, every system becomes just another idea, another concept that looks good but fails in execution. And the more you chase the perfect ratio, the further you move away from the real problem. Your reactions, your decisions, your inability to stay consistent when it matters most. Because trading doesn't break your system. It reveals your weaknesses inside it. You can aim for 3 to 1 all day, but if you consistently exit at 1 to 1 or panic at 0.5 to 1, then your real system is not 3 to 1. Your real system is your behavior, and that's what produces your results. So instead of chasing bigger targets, you start working on something deeper: stability. You focus on entering when your setup is valid, not when it feels good. You focus on holding according to your plan, not according to your emotions. You focus on accepting losses without trying to escape them. Because once you build that level of control, something changes. Now, when you set a target, you actually let it play out. Now, when price fluctuates, you don't react immediately. Now, when you're in profit, you don't rush to secure it out of fear. You follow through. And that's when the ratio finally starts to make sense. Not because it changed, but because you did. Because now your behavior matches your system. And when those two align, that's where consistency begins. Not from a number, but from execution. And that's when you realize something most traders never truly understand. The ratio was never meant to save you. It was meant to test you. Because anyone can set a 3 to 1 target, but not everyone can hold a trade long enough to reach it. Not everyone can sit through uncertainty without interfering. Not everyone can stay disciplined when the market is moving against them, or even when it's moving in their favor. That's where the real challenge is, not in finding the setup, but in staying with it. Because staying requires control. Control over your thoughts, your reactions, your impulses. Control over that voice that tells you to close early, to move your stop, to take what you can before it disappears. And that voice is loud. It doesn't care about your plan. It cares about comfort. It wants to protect you from loss, and sometimes even from profit turning into loss. So it pushes you to act, to secure, to escape uncertainty. But trading doesn't reward comfort. It rewards discipline. And discipline often feels uncomfortable. That's the part most people avoid. They want a system that feels easy to follow, a strategy that removes doubt, a ratio that guarantees results. But none of that exists, because no matter what system you use, you will still face uncertainty. You will still feel pressure. You will still be tested. And in those moments, your decisions won't come from your strategy. They will come from your mindset. So if your mindset is not stable, no ratio will fix that. Not 3 to 1, not 5 to 1, not anything. Because the problem is not the numbers, it's the person executing them. And once you accept that, something shifts again. You stop looking for better ratios. You stop chasing perfect setups. You start building something more important: trust in your execution, not based on outcomes, but based on behavior. You trust that if your setup is valid, you will take it. You trust that if your plan says hold, you will hold. You trust that if the trade loses, you will accept it without trying to interfere. And that kind of trust doesn't come from theory. It comes from repetition, from doing the right thing again and again, even when it feels uncomfortable, even when it feels wrong in the moment. Because over time, that repetition creates stability. And from stability comes consistency. Not perfect results, but predictable behavior. And in trading, that's everything.
And when your behavior becomes predictable, your results stop feeling random. You no longer feel like you're guessing. You're not jumping from one idea to another. You're not changing things after every loss. You're simply following a process, the same way every time. And that consistency begins to show, not in one trade, but across many, because that's where trading actually works, not in single outcomes, but in a series. One trade means nothing, but 100 trades executed the same way, that's where your edge appears. And that's why the obsession with 3 to 1 becomes misleading. It makes you focus on one trade, one perfect outcome, one big win. But trading doesn't reward perfection, it rewards repetition. It rewards the ability to do the same thing over and over, without letting your emotions change the process. And that's not exciting. It's not fast. It's not something you can show off, but it's what works. Because when you stop chasing outcomes and start repeating behavior, something powerful happens. You remove the pressure. You don't need this trade to win. You don't need the next one to recover. You don't need to prove anything. You just need to execute. And when that becomes your focus, the entire experience changes. Losses don't shake you the same way. Wins don't control you the same way. Everything becomes neutral. Not because you don't care, but because you understand. You understand that your job is not to win every trade. Your job is to follow your system. And when you do that consistently, the results take care of themselves over time. That's when confidence becomes real, not based on how much you made, but based on how well you executed. Because now, even after a loss, you're still stable. Even after a win, you're still disciplined. You don't chase more. You don't hesitate. You just continue. And that's the level most traders never reach, because they are too focused on outcomes and not enough on behavior. They want the reward without building the process that leads to it. But once you flip that, once you commit to the process fully, everything starts to align. Your entries improve, your exits become cleaner, your emotions become quieter, and your results become more consistent, not because of a number like 3 to 1, but because you finally learned how to execute. And when you reach that point, the whole idea of 3 to 1 finally makes sense. Not as a shortcut, not as a guarantee, but as a tool. A tool that only works when you do. Because the truth is simple. There is nothing wrong with 3 to 1. What's wrong is believing that it will fix everything. It won't fix your impatience. It won't fix your fear. It won't fix your need to control every trade. Only you can do that. And the moment you take responsibility for that, everything changes. You stop hiding behind strategies. You stop blaming the market. You stop searching for something new every time things don't go your way. And you start working on the one thing that actually matters, your execution. Because at the end of the day, trading is not about finding the perfect setup. It's about becoming the kind of person who can follow one. And that's where the real edge is. Not in the ratio, but in the discipline behind it. Not in the system, but in the consistency of your actions. Not in what you know, but in what you actually do when it matters. So here's the lesson. Stop chasing numbers. Stop thinking a 3 to 1 will save you. Instead, ask yourself something real. Can I follow my plan without breaking it? Can I sit in a trade without interfering? Can I accept a loss without trying to escape it? Because if the answer is no, then no ratio will ever make you profitable. But if you build that discipline, if you learn to execute again and again without letting emotions take over, then even the simplest system can work. And that's the shift, from chasing outcomes to mastering behavior, from looking for answers in the market to finding them within yourself. Because in the end, it was never about 3 to 1. It was always about you. If this changed the way you see trading, then you already know what to do. Stay consistent.